Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks amongst private investors on Friday, July the 11th. And I'm starting off with Gulf Keystone, where we've seen days of a decline from 115 pence plus, a bull trap through 110 pence, which was the former April resistance zone. The light at the end of the tunnel may be that we're back towards a sub 10 RSI on the 3-day RSI scale. That has been the floor for the shares over the past few months, and so even if we trade a little bit lower than 88 pence, which was Thursday's close, this could be the areas to start going long into. Obviously, the main support for the shares over the past few months has actually been towards 80 pence or just below that, so that would be the risk management area. Next up is Union Jack Oil, which has been a stock where we've had rising share price and rising volumes over the past few weeks. The technical position here is that there was a golden cross buy signal in June between the 50-day and 200-day moving averages, and all of this within a rising trend channel from December, with its implied target towards 0.6 pence, a level I've been calling for quite some time. Probably the consolidation we've seen between 0.3 and 0.4 pence has lasted a bit longer than one would have expected, but it does look as though the shares are finally ready to build up again and at least retest initial June resistance through 0.5 pence. And one would expect that retest to happen well before the end of July. Finishing off with a stock which is arguably one of my favorites of the recent past, largely on the basis that I called it up to 1.5 pence in early June, and we've seen a sort of extended bull flag which has had a breakout for the beginning of July. Now that 1.5 pence has been hit, really the name of the game is to try and work out how much further rare earth might stretch. The top of a rising major trend channel is heading towards 2.2 pence. And I would suggest that at least while there's no end of day close back below the initial July resistance at 1.5 pence itself, we could pencil in that sort of target. The shares are very overbought, obviously, after the recent rally, and so one would probably be looking to buy on dips, intraday dips towards 1.5 pence rather than at current levels. And at this stage, only really back below the initial June resistance towards 1.2 pence really turns the shares bearish. That's it from me. More updates on spreadbetmagazine.com.